I thought I went heavy with the group on this information. So I was just like, dang, like maybe I said this to a group I was teaching. But no, we're good. I said this to the whole class. All right, perfect. So if you remember from the last class, we talked about this scenario, okay? One of the beauties about this is that when the market once we go, right? What did I say? The market will not go back below that point, okay? That's one of your keys. It's literally that. That's a very important piece, is that starting point, the market does not go back below. And so once we get that, right, this initial, we talked about, this is an impulse. This is an impulse. This is an impulse. Okay. But once we get that correction, that first one, right? Once we get that first correction here, wherever that correction finishes, that is now the new bottom of your position. And you really never have to worry about it ever again coming back below here until it completes itself. Okay. Okay. And that makes this a very special opportunity here that I begin to call the optimal reversal place. Okay. This right here, this is what we want. So as we spoke, as we talked about it the other day, I shared with you how I describe this initial thing as the call. This is what brings me in. I see this, and then I wait for it to finish. Once it finishes, we know how to then respond. Okay? We know how to respond. Now, when is this going to end? Well, it's not going to end. The cool thing is it's not going to end until we reach exhaustion. What do you mean about with that? Well, we're going to have to reach prices, right, that are beyond what people want to pay, and where we start to lose volume or interest, and where we start to be in a place where it's time for it to come back to balance. But until then, this thing's gonna go. And that's the coolest thing about it. Once you catch this, now it's really about allowing the volume to exhaust itself. So we leverage, right? We leverage this whole mindset. Now, the other thing that I need to talk about, we'll just keep that there, is this. All right, should have went down. I'll just go up. When the market is moving like this, okay, there's something that we have to also understand. Now, the other day we said the 2 will never go below the low. Remember, you don't have to be an Elliott wave master, but you do need to have Elliott wave light. You got to understand that. You got to understand these basic rules, that your 2 will never go below the 0. Okay? You have to know that when you're in this type of impulse wave, right, your 4 will never go into the price territory of wave 1. But here's the other thing. Your 3 cannot be the shortest wave. Your 3 cannot be the shortest wave. What do I mean by that? The distance in pips. The distance in pips what are we doing, Chuck? Over here. The distance in pips sorry, I'll wake it up, y'all. The distance in pips here, see 17.5. Well, this right here must be longer, or cannot be the shortest. And so when we look here, we have 28, 26.7, 17.5. It's not the shortest. Wave 3 cannot be the shortest. It cannot be. Now, wave 3 typically is the longest. Okay. It's not always the longest, but it typically is the longest. Okay. So guess what happens here? If I can catch this, I have the longest or the greatest chance to go typically without having to worry about retracement. This is going to be my longest run without having to worry about retracement. Now, remember, even if it retraces, placing my stop loss here, I don't have to worry about it because we're not going to be able to go below that. We're not going to be able to go below that until this fifth wave is complete. And we're also not going to be able to go, as we talked, below the the 1, go into the territory of 1. So we can see here, there is a major advantage. This is why this is the optimal place, is one of the reasons. There's a major advantage because it's going to go the longest, usually. And even if it retraces, it's not going to stop you out until the whole thing is over, right? You're not vulnerable until the whole thing is over. And, okay, and you don't have to worry about having to start all the way over. On wave 1, you can start all the way over, meaning even though you don't have to worry about your stop loss getting hit, you do have to worry about being faked out. And here you can still be faked out, and then they come down and they stop you out, and then they go, right? And then begin what you thought was the actual thing, right? But that is a threat. But if it truly is done and it's the beginning and it's 0, you don't have to worry about getting stopped out, but you do have to worry about starting over, right? Where you're in profit and then now it's like up back to break even, or sometimes drawdown, depending upon where you got in on this. And now you're trying to make money again, right? This for me always felt like kind of a waste of time, right? It always felt like a bit of a waste of time. It was frustration here because of the possibilities. Okay. Now, of course, if I could catch it, it's there. But someone may say, well, Chuck, why not even worry about it if this is going to come back? Well, if it matches your personality, sure. My personality is a details personality, and I can't ignore the details of having been maybe at a 5-to-1 return on my investment, right, of my risk, and then going back to being in drawdown. My brain doesn't accept that. It sees it as you did all this work to be right back at the starting line. But it's going to go again. And I would say, cool. What that just tells me is that I could get my money here when this is completing itself, and then I could let it take its break, and then I can get in here. So then I don't just have this 5-to-1. I have this again, that another, now I got 10-to-1 plus the 5-to-1. My brain thinks, why not get both of these, right? That's just my brain. Your brain doesn't have to think that way. I'm just telling you that's how I think. So what it ends up being is, I don't care about this. This doesn't matter to me as much. The only reason it matters to me is from the standpoint of it's giving me information. It's giving me the call. And once I get that call, it now is about allowing this thing to retrace. And then I'm going to try to get this spot right here. This is the optimal reversal position because of everything that I just said. And guess what? When this happens, I don't have to go before my board of directors. To take this trade, I have to get out in front of my board of directors. Remember my board of directors? Trend direction, momentum, and strength. I have to say to them, to catch this, I have to say to them, I think we're going to just go ahead and make this decision and get in right here. And they're going to say, no, Mr. Jones. No, we don't agree. But it's my company. It's my trading plan, right? It's my trading account, right? I can do whatever I want to do. Mr. Jones, we just don't agree. This is a good decision. You know what? I'm just going for it. That's what I have to do to catch it here. But when I'm over here, there's full agreement from my board of directors. I don't have to worry about going against anything. So now I have one of the most optimal positions, is my argument, because it's not just about the benefits that we're outlining, which are, right, longest wave potential, not having to worry about getting stopped out or starting over. You're not going to start over here, right? It just doesn't work like that. I don't have to worry about it not being giving me a reward, right? It's going to give me a reward. The reason is because it's early. I'm catching it early. And so no matter what the market does, it's going to still go, right? A lot of you guys that trade ORS and you tell me you're struggling with your risk to rewards, is because you got to work on catching really the optimal reversal position, right? And this is the optimal reversal position, and it's going to give us the best return. So here, excuse me, I need some liquids. Right here, right here is man, I turned 41. I shouldn't be going through puberty. Right here should be the moment that you want, because again of the potential. You're going to this is it. You got everything. It's the confirmation. Okay. Let me know in the chat if that makes sense to you, okay? By giving me a high five. We got Natasha out of Virginia in the building, John, Pennsylvania, Kyle, Ontario, and Trinidad, David, Pittsburgh in the house. UJ is buying. Let me know in the chat. Give me a high five. Okay. All right, high fives coming in. Check to see. Looks good. So this is where I want to take my trade. Now, I do want to remind you, ORS is not the only way to trade. Okay? It's not. You guys can create your own recipes. Okay? Trading is personal. You might be attracted to trying to catch those reversals. For me, it became unattractive. And so when you guys come to this class, right, my focus is teaching the system that I felt changed everything for me. And I've been able to see it change things for others. So that's what's happening, right? That's what's happening in this particular class. Okay. And this is where you're going to see me double, quadruple down on the things that I do, right? On the things that I do. And so this right here is one of those things. It's trying to catch the trade here. Okay? Trying to catch the trade here. But I do want to tell you, I'm only going to get deeper, right? As we get into this series, I'm only going to get deeper into what I do. And so if you want to turn around, go the other way, feel free, right? But if you want to take this journey, right, then man, hold on to your hat and we're gonna keep going, right? I'm gonna show you why this thing is so cool, right? It's so cool, in my humble opinion. Okay. So this right here is the optimal reversal position. Okay. My mom raised me with manners. So I carried those manners into ORS and I said, look, don't worry about it. You can go first. I don't got to eat right now. You go ahead. Go eat. You sure? Yeah, go eat. Go get your plate. Yeah, I'm gonna wait. I'm gonna wait. And this is what I'm doing right here. This is that somebody else's money. This is somebody else's plate. They can have it, right? I want to come in right over here. Right? Go ahead. Go first. Okay. So type in the chat. In ORS, we have manners. Okay. In ORS, we have manners. We're gonna let them go first. We're gonna let them go first. Let's come down to this chart, right? In ORS, we have manners, and I wanna show you what letting them go first looks like. And just come on here, and let's look here. This is an easy example of letting them go first. So here, I want to show you this. Okay. We're going to put this over here. We let them go first. We have manners. All right, let's grab this. Go here, here, here. Okay. Here, 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 and here. Okay. Old way of doing things for me. I know I want to buy, right? I'm looking to buy and I want to buy off support. So one of the things that the old way would do is, okay, market's coming down. Let's go ahead and buy. All right, we're going to put our stop loss down here. And then what happens is the market does this and then does this and does this. And maybe any of these opportunities might be the time where someone would say, all right, let me go, right? It's going to go. Oh, it's holding the level. Let's go, right? All of these different things. But notice how it's like you end up, in this starting over scenario. The starting over scenario. So now we're starting over. The market's coming back again. Here we are, and we're trying to go. We're in the trade for the buy. And we can see here that our stop losses, look where our stop losses are, right here. It's like, oh, okay, well, that wasn't it. Well, let me try to see if I can get in now. Maybe this was just a fake out, and I'm going to get in now, right? Maybe this was just a fake out, fake breakout, but now we're going to go up. So we get in, and then the market does this and ends up stopping us out. It's like, oh, shoot. Okay. Well, it's going to be right here. I'm going to get in right here. This is where I'm going to get in and try to take it back. Oh, yep. Here we go. Here we go. And now we're back to the starting line, right? We're back to the starting line, starting over again. Got stopped out again, right? Got stopped out in here, stopped out over here, stopped out again over here, right? And we're just getting stopped out. Okay, let's go. All right, here we go. Time to go. All right, here we go. Oh man, dang, again? Okay. I know Mr. Guru, right? Mr. Guru told me, right? I just gotta wait for this pattern and that pattern, and then I'll just But what's happening here, right? What's happening here is this is all predictive. We're predicting what's going to happen. And so when they keep trying to trade these reversals to take this thing up, right, it's coming from this place of prediction. They're assuming and guessing where these markets are going to turn around. Okay, now we're going to go up again. All right, here we go. Here we go. Let's go. Now it's time. Oh, man. Right back at the starting point. Oh, man. And then at this point, you're so in your head that you're like, you know what? I should just be trading, right? I should just be trading for the sell, right? So let me wait. Let me get in this sell now. And now the market does this on you. What happens is this is predictive. However, what is not predictive? Well, once this happened, I don't have a prediction now. I can see what has happened. This is the call. And now all I have to do is take advantage of getting in here. And now my life is going to be a lot more fun because I'm getting in at the place, right, of the call after the call is over. Okay. And so here we can see that is where you want to get in. One of the reasons why I have very low drawdown typically is because of this whole principle here, right? Is because of this whole principle. Now, you guys remember what I said. You don't have to worry about the market coming back here until it's complete. Well, if this is complete, now we might get stopped out if we hold it. And this is where a lot of us get in trouble too. We go too far. Now I'm going to show us how to not go too far, and that's going to come as we go into our Fibonacci principles. But this right here is key. This is where you want to take advantage of the market. Not in here with the fake outs, right? In here when we got the information. What information? Well, we have our pillars. Okay. Notice how at this point, our pillars are all in agreement, right? Notice for me to try to catch it here or here or here or here, I have to go without my board of directors, right? Board of directors are not with me. I'm trying to buy right here. Let's look. Okay. All right, here I go. Saw my little pattern. I'm going to try to buy right here. Notice, board directors are bearish. We don't agree, Chuck. Trend direction is bearish. We don't agree. Trend direction is bearish. We don't agree. Trend direction is bearish. We don't agree. We don't agree, right? We don't agree. None of these areas where it kept getting faked out, we don't agree. But if I wait for this, and then wait for this, then we'll be good. Now, someone might say, well, Chuck, I did see the pillars start to agree later, right? What's the difference? Well, the difference is that none of these change the trend, right? So when this came up, the trend was still bearish, right? None of these changed the trend. So we still stayed in that downward trend. Over here, this changed the trend, right? As we were moving down, we shifted and we changed the trend. And that right there is the key piece right here. We shifted. We'll talk about changing trends more later. But this right here, boom. Not only did we get pillars, right? We changed the trend first. The trend changed. And now it's time to go. Okay. Now it's time to go. And again, like I said, you don't have to worry about it coming back unless this is over. Now, if it is over, that's where you get that deep retracement and you're like, oh, well, Chuck, you told me I didn't have to start over. Well, yeah, you don't have to start over as long as you're trading with this impulse. But if you wait for the overall correction to come in after this impulse has been completed, you might start over and you might get stopped out. Okay. So you just have to understand the nature of this movement, right? This is how the market moves, right? We make that impulse, right? We let them go first, right? It's all about letting them go first. What else can we look at? We're gonna let them go first. Okay. Here's another one and another one. Okay. And another one. Now, you could see it here. This right here, we're going to get our areas, right? We're going to look for our areas here. So got level here, here, and there, and there, and there, and there, and there, right? Got all these areas. Okay. So we're predicting market's gonna turn around. Okay. Turn around. Look here. We're predicting market goes up. Oh, here's going to be the place. Let's sell. Let's sell. All right. We're doing good right here. Oh man, right back, starting over. Let's do it again. It's just a double top. Oh, never mind. All right. Here we go. Fake out. Right. There's liquidity move. We're going to go now. Right. Going to go now. Yep. Here we go. Let's go, fellas. And then the market, right, does that to us. Okay. And so here's what I'm trying to get at. This right here is a guess and check method. You will have some pips. This is where it's like, I was in profit. I don't know what happened. Right. That's that life. Right. That's that life that you have on the reversal as you're trying to catch that reversal. But now look at the difference. Now we push up. Right here, we allowed them to change directions, allowed our pillars to come in. And now what are we going to do? Well, we're going to take this one. We're going to allow the market to do this. And now we're going to let it do this so that we can do this. Okay. So we can do this. This is what we wanted to be a part of. Now we're not guessing. Look how this is the optimal reversal position. Okay. No drama. Once it goes, it goes. That's it. But we got to wait. Right? We got to wait. Now, again, some of you guys, if you're not paying attention or you're not experienced, you might say, well, I thought we had it over here, Chuck. I saw the pillars come in, did it. But the difference is, again, you have to pay attention to the change in structure. Okay. This is the biggest key. Now, if you struggle with structure, I'm not going to do it in this series because I already have too good of a series for you to go watch. But if you're struggling with your structure, then what you have to do is you have to go and watch the series that I taught on the kingdom. Okay. On the kingdom. Okay. This is the structure. So what happened is right here, we shifted that structure. And now once structure has been shifted, all we got to do is leverage that pullback and go now with what our board of directors are saying. Okay. What's up, Anaya? Elvis in the building, Cameroon in the house. Okay. This right here is what we want. We're going to let them go first. Okay. Now, before I get out of this wave structure stuff, I want to talk about one more thing. Okay. One more thing. Didn't want to do that, but we wanted to do that. Now, it's important for us to understand this. Now, as we spoke about, whether it's an impulse that looks like this or it's a correction, we're at least going to have that optimal reversal scenario. Because whether it's here or here, we're still looking for the same thing, right? Both of these things are going to produce an impulse, okay? An impulse. So this is the optimal reversal. It's the most flexible because it doesn't matter if you're in an impulse or a correction. It's going to be the same thing, right? Very important. Be able to see we're doing the same thing. So corrective wave would mean that right after all that is done, the market's going to then go the other way, right? It's going to do something like that and go the other way. So it's not going to produce that 5 movement, right? And go the other way. Here, after this is done, this is going to correct. And the cool thing about the correction is, you know, it's not going to go all the way down there. It's going to just come in here somewhere, right? It's not going to be a full reversal. It's going to stop, right? It's going to be limited. And then after that, the market's going to continue on. Okay. So ultimately, no matter what structure you're in, impulsive or corrective, this is going to be what you want to see. Now, is every pullback created equal? Do we want to take all pullbacks? No, there are some things that we will ignore. And we're going to talk about that, right? There's a way that we want to see this occur, right? The call, there's a specific way that we want to see the call occur. And we'll talk about that in the upcoming sessions. But this is what you want to see, right? This is what we want to see. We want to see this. Let them go. We're going to come in and then we're going to get involved. Now, here's the other thing. The market, right? The market makes this move, but it makes it on all time frames. Okay. Type in the chat, please. Structure is structure. Structure is structure. What do I mean by that? Well, I don't care what time frame I am on, right? If I go over here to daily candles, okay, we're going to see this same type of behavior as I would see if I came down to the 1 minute chart. The only difference that we have here is that you have right here is how long it takes for these candles to play out. Okay. You will hear people say you cannot trust the lower time frames. The lower time frames you can't trust. They're noisy. You can't trust them. What I will tell you is, this looks no different in my eyes. I don't know if it looks different in your eyes. This looks no different in my eyes than this looks. It's the same behavior. Okay? Same behavior. Now, what happens? What do people, when they say that, why are they saying it? Is there any merit to it? Well, I say what the real problem is not the 1 minute, the lower time frame. It's not that it's noisy like that. It's still following the same rules of higher highs, higher highs and higher lows, and lower lows and lower highs. It's still following the same rules. But what is happening though is what people will do is they will try to take lower time frame trades and turn them into higher time frame trades. They will not be paying attention to the structure that they're on. The cool thing about trading ORS is, let's say I took advantage of this move right here. Well, even if I am trading on this 1 minute, I don't have to stay in this trade to a daily target, to a 4-hour target. I can know when it's time for me to exit this by basically paying attention to the pillars, because the pillars are going to go with you on any time frame. The pillars are actually customized to the time frame that you're on. So what does that mean? Well, this trend, our 20, our 50, right? Our momentum indicator, our vortex, all of it is going to let you know if it's time to go, right? There's 4 things that happen, right? There's 4 things that happen. The first indication that it might be time to go is that volume begins to change, right? Where you get a cross in volume. What do I mean by that? Well, let me put this in a chart here, bring it to a line, and you can see this right here, this cross down. This is a signal that it might be time to go. It's a signal that is might be, right? All of those are signals that it might be time to go because it's crossing, volume is starting to fall. So you're gonna have your heads up. What's the next signal that it might be time to go? Well, the 4 crosses the 20, right? So right here, we had a signal and we had a 420 cross right here. Okay, if you can't see it, let's get these candles out the way. Right here, boom, right? That right there is a signal that it might be time to go, right? 1, 2. Now, what else happens? Well, there's a third thing that happens. The 4 will cross the 50. So we can see we got the signal 1, we got the 2, but the 4 didn't cross the 50. Maybe it's not time to go anywhere. Okay, over here, I got signal 1. No signal 2. Okay. I got signal 1. No signal 2. I got signal 1. Oh, I got signal 2. Oh, I got signal 3. It may be time for me to go. The 4 crossing the 50. So this red line is the 50. The white is the 4. So we crossed the 20, the blue line, the red line crossing the 50. Yeah, I should go, right? I probably need to start getting out of here, right? Especially if we get the final sign, the 20 crossing the 50. So we have 4, man, we have 4 different signs here that we should not be in the trade. And so again, this is happening on all time frames. Okay. This happens on all time frames. So it doesn't matter what type of trader you are. If you are a trader who is trading on higher time frames, in the middle, maybe your 1 hour time frames, right? 30-minute, right? Or you're coming down into some of these scalper territories, right? It's the same thing. It has flexibility. So where people are messing up, structure is structure. The market is doing the same thing over and over and over again. But where they're messing up is they're trying to trade this structure with higher time frame structure. That's the problem. They're trying to mix it, and it doesn't work that way. Okay, you got to trade the time frame that you're on. And this is where are you going? And where are you going? Okay, this is what you're looking for. Okay, this is what you want to see. You want to see this flexibility. Okay. Now, trading is personal. I say that all the time. Trading is personal. And even in the ORS, you can bring your personality. Now, I remember I told you, I'm showing you, right, how I trade, right, how the system works. But within the system, there is space and room for your personality, for how you're going to do it. Ultimately, the key to it all is we never go against our board of directors. We just don't do it. Don't go against your board of directors. And as long as you do that, you're going to be in a better position while you're trading. Okay? The board of directors are not lying to us. Okay? They're impartial, right? They're non-biased. They don't have any feelings or emotions. Right, I was watching Superman, and Superman had some helpers. Right, they were robots, and he said something about one of the jokes was, they were. This is not a spoiler because Superman always is in a fight, but Superman happened to be in a fight and he had got beat up and he needed to recover. Right, and they're joking with him and they say, basically they would have, I'm paraphrasing, they would have empathy for him, except they're not programmed to have empathy, right? They don't have any empathy for the scenario, right? He's looking really bad here. They can assess that and see that, but unfortunately they have no feelings toward it, right? They're not programmed to have feelings. Okay. Our board of directors, they are never going to be in their feelings. They're not programmed to have feelings. Okay. They're not programmed to have feelings. And so what I want you to see here is this is why I roll with them, because now I'm able to be objective. I'm able to be objective and get out of my own head, because I have feelings. I have desires. I have wants. I have personal things that I believe. Right. And I have to take that, right, and submit it to the board of directors and yield to whatever they say. Right. It makes it simple for me. And it's not an emotional decision anymore. Right. And so that's what I'm hoping that we get, right, from this. Last thing I want to say about waves, right? Let's come over here. Let's do this. I want to show you this. Let's look at this. We have this, 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 and this. Okay. Now, what is true about waves is that waves, right, have a fractal nature to them. For instance, this happens like this, right? But it's important for us to understand that within that is this. There's a 5-wave move that is inside of that. There's a 3-wave move that is inside of this correction. There's a 5-wave move that is inside of this. There's a 3-wave move inside of here. There's a 5-wave move inside of this. The market, right? The market actually is fractal, meaning that it has the ability, like if we had a pizza, here's our pizza, right? And then you tell the pizza man, hey, we'll be sharing this pizza, right? It won't just be me, right? Or maybe it will be me, but I'm gonna share it with myself in different scenarios. And for my convenience, can you go ahead and chop it up? They'll say, oh, okay, cool. And what they're gonna do is they're gonna take that whole pizza and they're gonna chop it up into fractions or fractal, right? It's now a fractal scenario, smaller piece of the whole. Okay. So when you hear us throw that term around, fractal, it's coming from that same place. Now I have 8 slices, right? And before I just had one whole. Well, if you can think of it like this is the whole and this is the fractal piece of it. Okay. And so what I'm getting at is over here, I identified the whole. But now what I'm going to do is I'm going to show you the pieces. Okay. When I come in here, this is the pieces. Right? Those are the pieces that are inside of this. Okay. Change the color real quick. Yeah. Whoa. A little too much for my eyes this morning. All right, we'll do that. Right. Those are the pieces that were inside. Let's go back over here. Inside of the whole. Okay. And so ultimately, it's understanding that this is happening. This type of movement is happening on all time frames because the market is fractal. It's involved in the whole picture. So you might be moving on the weekly or the monthly in a certain way, but when you break it down, you start to see that you're moving in more detailed fashion in the 4-hour chart, right? In the daily chart, in the 1-hour chart, right? Your 1 hour might be doing one thing, but you'll drop down and you'll see 5-minute might be moving, right? Let's concentrate on this area, excuse me. Come over here and we can see, right, that fractal nature, right? That fractal nature. You can see it in here. Okay. Also, guess what you can see inside of there? You can see the fractal nature. This goes down. This is why trading works even on the second charts, right? If you guys have seen me sometimes trade live, I've made decisions all the way down to the second charts. 1 second, literally. Why? Because this doesn't change, right? It doesn't change. Same thing. Same thing. Over and over and over again. Guess what? Pillars will go with you. Pillars will come right here with you, right? They're going to flow. They're going to adapt. They're going to customize themselves to the time frame that you are on. Okay. All right. Well, hope you guys got something from today. We're taking this one step at a time. Okay. Taking this one step at a time. But my goal is to get you guys there. Thank you, Terrence, for dropping that in. Got the MACD cross, the 4 cross the 20, 4 cross the 50, and 20 cross the 50. Right? Time to go. Don't hold on to that trade. You don't know where that thing will go after that, right? Time to go, right? No matter what time frame you're on, time to go. Okay. If you don't want any drama, time to go. If you're all about the risk taking, then sit there and find out if you want to, right? And what do I mean by that? Well, it doesn't depend upon where you are, right? Once you get those warning shots don't have to mean it's going to retrace the whole way, right? But for me, it's like, well, I don't know. I have no idea what the market's going to do, right? I can't assume. So what this does for me is allows me to be consistent, right? To have a consistent approach to say, well, if we haven't hit my targets yet, I'm going to get out if I start to lose my pillars, right? And knowing those 4 things matters, okay? All right. So I appreciate you guys for being here this morning, okay? Hopefully my my newer students that are just now getting exposed to ORS and learning it, you guys are feeling even better, more confident, and you're starting to understand some of these principles, okay? And some of my OGs that have been around, hopefully I'm reminding you of the simplicity that you may have been missing, right? Getting back to the basics, getting back to paying attention to these principles, right? And going from there. So I will see you guys later. You guys enjoy the rest of your weekend. And I'll see you guys next week. All right. We'll keep this going.